Here we go. Welcome to NP Financials Masterclass in the month of May, and today's date is 7th of May 2023. I welcome you all, and we'll start with this general financial product advice warning. As usual, NP Financials Pty Limited. Before that, you all can hear me and you all can see the view
Yes,
the
sir.
general financial
Yeah,
product advice warning, correct?
yeah, we yes. can
Fantastic.
see.
Brilliant. NP Financials Pty Limited, fantastic. NP Financials or NPF advises all service recipients with the following. This information is provided only on general financial product advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. No information received from NP Financials shall be considered as a financial trading recommendation. I'll allow another 15 seconds to go through it, and then you let me know when you are done.
Hold on.
All right.
Done, sir.
Fantastic. Brilliant. Excellent. All right. So what we will do today, we'll be missing Kerry Brown, the renowned neuroscientist or neuroscience expert, uh, because she has a bad throat. That's what I was told, and she's probably recovering. So myself, Marty, and all of you will be listening. Will be listening more and talking less. Myself and Marty. We'll be learning from you, and we'll be answering. We'd love to answer all your questions. So please do not hesitate to ask any questions. As we always say, ask questions and do not suffer in silence. If I'm moving my head too much and my microphone is getting out of sync, let me know. If I move fast, let me know to slow down. If I talk too slow, you let me know that, but it's all right. The pace is all right, and then I can move on. So today I'll start with a couple of new things, so not new opportunities, actually, new opportunities which we as a company have introduced lately. As you know, we have started long back, and then we started funding, and then after the trade ideas, we started sharing, as you can see, trade ideas here, and then we segregated the different businesses into NPF funding and NPF training and NPF trade ideas. So this is anyone who is everyone or any was looking for NPF capital audition. It will not be there on the menu. It will not be there on the menu. But actually, it is there is a mention here that take control of your finances, trade forex shares, commodities, indices, intraday cryptos with confidence, get access up to 1.925 million in funding with NP Financial Trader Training Funding. So this business is actually being handled by this loading page, or uh, yeah, that's what they say. I think so. I exactly forgot the term. Landing page. Yeah, landing page. And this is the landing page for the NPF capital audition offerings. And this is the landing page for the training. Of course, we have training here, and if you click on training, it will take you to the training, and we have forex. The new opportunity which we have introduced is the after the trade ideas. Recently, we thanks to Marty, almost tremendous effort from Marty Stewart, our senior trader. What he is doing, he is contributing, he's analyzing four different I think time frames and opportunities in the form of 4 hour opportunities like this one, 4 hour Elliott wave, and then we have the daily market outlook, so 4 hour and daily, and then we have the daily Elliott wave analysis, and then we have the Elliott wave trade of the week, and we have the we have the weekly outlook. So these 5 videos, he is putting a lot of effort, as you can see, and actually I actually also want to listen from Marty how his thinking process is going, how he's structuring, and how he's helping other traders. Actually, free. This trading video entire thing is free, as you can see. And if you click one of them, fantastic. So that was Marty speaking. And apart from that, Marty's analysis, we also have our own uh, recordings, of course, which are a little bit old, but techniques or technicality remains the same. What was there 400 years back will be probably there 4,000 years from here. So we have tech few lessons from our best trading platform, and these are lengthy ones, 2 hours. Yeah. So that is me talking. And with these trading videos, you can actually not only visit the old discussion points which were there from 2013, I think, but the new ones which is happening as of now, every week before the start of the week. So before the start of the week, the week will start tomorrow, 8th. So 8 from 8 to 12. So all the analysis except one will be placed for our free members who are there. So you can take advantage of stalwart like Marty analyzing the market and telling you telling you the profit, telling you the probabilities of the coming trades and the markets. And we know how well it went for the USD JPY, how well it went on the Euro USD, and of course now he has a big one on the gold front. If you go to our Discord room, you'll come to know. So this is the one which we are not putting beforehand. That's correct. Is it Marty this one or the other one?
Yeah, this one, correct. Trade of the week. I'll keep that one in here.
Yeah.
Yeah.
Fantastic, brilliant. So we have decided to keep this one for the paid members. Otherwise, you will get everything free as of now. Invaluable expertise from stalwart like Marty. And of course, you can pay. You can be a paid member to get this one, which is the trade of the week market analysis. Along with this is only one video, but if you can see his analysis, previous analysis, you'll be this is the kind of analysis what he did much before at around this period of time. He said that euro would be coming to this point. So that's a tremendous analysis as far as the trading world is concerned. Trading was in world is concerned, and then we can see how he has pinpointed much before how euro USD is going to hit this one. So this is a tremendous channel. This called Elliott Wave, the fourth one, I think. One, two, three, three. We also have intraday trading, which is running at around 78% success. We have a trading market open. Uh, Good afternoon, Dan. How are you? You can unmute and say hello to everyone if you want. All right. So, all right. So I was talking about the trading market Discord, which is operating at around 89% success. We have the Elliott wave for the big ones, as we saw in the euro, and as we see from Google, Goldman Sachs, etc. So these are for the paid members, of course, but a very low fee as of now for only 47 US, and soon it will go up to 97 US. 4 hour swing we have 12-hour swing and the daily swing. So these are the 6 paid channels, but the free ones would be available here on this one. And then the one which is coming, not yet ready, maybe this week it will be ready, is the offer page, I think. So we are coming out with some offers for our long-standing members and also for the new members who are joining us, because we have got a tremendous feedback from members like you, that why don't you club uh, your offerings, because we have so many. We have in training, forex shares, commodity bonds, indices, intraday, In Forex, we have basics, Elliott Wave, Trader Foundation, Advanced Forex, and Professional. We have trade ideas, so trade and Discord. So we got feedback. Can you please actually combine and give us some opportunity to learn or gain from Discord while we are learning from Trader Foundation or from something. So for that, what we this is not ready. This is draft. So what will be doing, will be presenting you some good opportunities to learn and gain money from the, because this is actual trading. This is live trading as it is happening at 9:50 every day, around 9:50 for the intraday, for the ASX. We have been posting trades for so many months now, and we can see that it is operating at 80% success. And for trading market now opening at 9 o'clock, so every day around 9 o'clock, or 9 to 10:30, you'll be getting opportunities for mainly six instruments: gold, oil, ether, and then yen. So yeah, and two more. So these are the everyday live opportunities which is happening. So what we'll be offering will be actually offering the live opportunities along with our educational material, and it will look like something like that. I don't know. It is yeah, it is getting ready actually. It is getting ready. Something like that will come, and then a link will be there. You can get the offerings. So these are the two things, along with the training, funding, trade ideas, trading videos, and new offers. So the trading videos is already live. This new offer of the offer page is not yet live, so we'll be making it live maybe this week or next week. Yeah, so these are the two opportunities which I wanted to show you before I go into the market and analyze all the market. So do you have any questions on these two offerings? I'll give you 1 minute to think and ask. Or you can also chat with us in our chatting room here. You can type in questions so that the moderator can answer that questions. And then the chat box is there on the bottom right hand corner of your Google Meet section. Yeah. All right. So you think about it, and then we'll go and start with probably we'll start with foreign exchange, and then we'll go with other asset classes. Okay. In the meantime, if you have any question on any foreign exchange, you can actually post or ask. While you were asking, unmute talking. Actually, unmute your mic and then talk. Uh, Otherwise, you can type in. Karan is saying this is for which scripts? Means what? Karan, scripts means
Uh, Scripts means sir, forex pairs, index, or commodities.
you mean the Discord?
No, the highest.
Sorry, this one.
Uh, Hello.
Hello.
Actually,
Are you looking for this one?
highest.
Yes. Yeah. Yeah. That's a good question actually. Discord is actually spread in all the asset classes. Forex, we cover 8 currency pairs. Just to show you that, let me bring this in front of you so that you understand what we are talking about. We are
Yes.
talking about eight currency pairs, and those currency pairs are listed here. So those of you who have done our Forex course actually will be knowing those 8 currency pairs,
Yes.
and they are Aussie, Euro, Sterling, Yen, and then Euro, Aussie, Euro, CAD, Sterling, Aussie, Sterling, CAD. So these are the 8 currency pairs which we'll be discussing mainly in our 4 hour, 12 hour. But on the daily, we'll be also concentrating on the 8 stocks which we trade, and 8 commodities which we trade. So 8 stocks which we trade are as you know, there are so many lists. I also get confused where are
Okay,
my
got
eight
it.
list of huh? A
Got it.
list of 8. Got it. You got it right. So in commodities, but for Elliott Web is also for the commodities and shares. But this one, the intraday is specifically for ASX 200. Only for ASX 200,
Yes.
we give one trade per day, and that's what we had been doing for last 200 days, and 160 days were successful in front of you. Each day it is happening, and out of the 40 losing trades, we have 35 cost of business, that is hitting stop loss, and that was only one third position size, so not even 1%, only one third position size. And for 5 days our cost of business was 1%, so that was only ASX. Trading market open, we have 3 or 4 asset classes, I think 3. One is crypto, Ethereum, Forex, yen, and sterling, and then commodity, oil and gold. So these are the distribution of the asset classes among these trading Discord channels. Did I answer your question, Karan?
Yes, sir. Yes, sir. Got it.
Yeah, fantastic. Anyone having any other questions regarding the trade offerings or the videos? Anyone?
Uh, yes, Parth, I have one question.
Yeah, go.
So I'm still very new, but so let's say, for example, if I buy the this Discord channel subscription, which is maybe 47 whatever, is it comes with a bundle with all these channels, or is it like just per channel?
No, that's a good question. You have to go to first. You have to join our NP Financials Discord, and the link is there in our
I'm already on Discord, Parth.
fantastic,
I haven't
brilliant,
using it, much, but just since
brilliant.
we are talking this, I just thought of
Yeah,
asking. Yeah.
absolutely, absolutely. So you will actually we have already answered. I'll answer that question, but again, anyway, it's already been answered in our product or pricing. This one, product pricing. So if you click
Okay.
on there, we have intraday trading Discord trading. These are the links. These are the links for the 1, 2, 3, 4, 5, 6 channels. Each one is mutually exclusive and standalone channels. Each one is costing 47 US as of now. So you can click any one of them. You can click any one of them, and then click yes, I want to subscribe, and then take advantage of that, and then you can go to view cart and do that. But if you want to club it, if you want to club it and get a better opportunity, better price, if you want to do that, of course you can write to info@npfinancials.com.au, or you can wait for a new offer page which will be live this week or next week, the coming week or the next week after that, and then we will be having tremendous offer, and we'll bundle. So before you have asked your question, we have the answer. Did I answer your question, Gautam?
Oh yes, thanks. Yeah.
Fantastic. Anyone having any other question on this one, videos or offerings, before we go to analyze? If not, yeah, of course, as I said, you can type in the questions here. We'll be answering that question also. And otherwise, you can unmute your microphone and then ask questions. So first, we'll be going through foreign exchange. Let's start with the our favorite one, which is the sterling, of course. And let's take this out. Oh my God, so many people get confused with so many lines. Then they decide to leave and do something else. Don't do that. So how to get rid of all these lines? Those of you who are newcomers, like Sunil and Gautam, but don't panic. Click on the settings. Right click on any blank space. So right click on any blank space, not on the line, not on any line. Right click on any blank space, and go to settings, and then go to settings, and then you can take one by one. So for example, don't delete it. Just take this out. Just take this out. Take this out. Take this out, and take this out. So the 4 yearly pivots, everything is gone. Why I'm just doing this toggle switch, because if I want, I can bring it anytime. So in front, just 1 minute before, you saw thousands of lines, and probably I also got panicked. So then what you can do, you can actually take all of them out. No move. I don't want any moving average. I don't want any pivot. I don't want any high and low. I only want naked price. So the naked price in front of you, the bare price in front of you, and a couple of the lines. These must be there. These must be there. Yeah. Gautam, you were saying something about the importance of these lines and how they bounce from these lines on your what you experience, what you are, or the practice task, what you do. Can you would you like to share your experience, what you are doing as a newcomer?
Yes, yeah. So, I mean, as lessons, progress through, I mean, initially I thought, why we are drawing this support and resistance lines manually, because we have like pivots and other tools inbuilt indicators. But I mean, as we progress through and now we are midway in our training course, I think, now I understand the importance of these lines, that, how exactly or precisely, even if it is a manual effort, how exactly and precisely it is matching with pivots most of the time. And, the trades are actually bouncing, or, the zone of, support and resistance, of a particular, pair, or for a price. So yeah, definitely it helps in understanding, where the price would possibly go or bounce from, or probably break out. In case, if it breakouts, then which would be the next level. So, like, at yearly, monthly and weekly support and resistance lines. Yeah. So it is definitely very informative and, very useful in case, you are a newcomer. So, how the price will move between the zones.
Fantastic, brilliant, excellent. Thank you for that. You heard from a newcomer how it is actually bouncing from, how it actually dances. I would say dance between from lines to lines. It is like a water. It is like a water. So even if you have drawn a head and shoulder right in front of you from the all-time low, from a yearly line which is at 10345, you can go easily and make it to verify that you make it the yearly chart, and then you can see from 1975 to 2023, this is the all-time low. Because we have been using this itfinance.com chart from last 20 years, we don't change. We have not changed, although we have seen everything, including e-signal, eToro, everything. But this it.finance.com real-time charts are one of the best. So we and very reliable also. So we rely on the data from which this provider provides us, and then we have an all-time low here in 1985. Our job is to draw a line there. That's it. Don't forget about it. And then allow the price to do whatever it does, because price will always do whatever it does. And then whenever it is coming to that all-time low, as you can see, it came here 27th of June, whenever it is coming to that all-time low, now we know what to do. Now we know what to do. Either we can place an order here because we have practiced so much, and we saw 70% success or something like that, 67% success of a for bouncing from the yearly line, especially the all-time low, all-time high, especially valid for the sterling, for yen, USD, JPY. And even if you miss, if you are a pattern trader, what you can do, probably you can do a pattern trading here. You can draw head, right shoulder, left shoulder, and the swing high in between the head and the left shoulder, swing high in between the head and the right shoulder, and join this neckline. Even this neckline, how important is this? It will break. When it breaks, we all know that price is possibly going to go high, unless and until it is breaking the line between the head and right shoulder. And look at the magic, even the small neckline, how price actually, if you have drawn it correctly, if you have not drawn it correctly, remember we are playing this game with Goldman Sachs, with Citibank, with HSBC, with all the big names on the opposite side or alongside. Well, I don't know what they are doing, we don't know what others are doing. But if we have drawn it correctly, if we have done it theoretically correctly, then invariably market participant, whosoever it is, will actually take that opportunity as a demand zone or a supply zone. So if you have drawn this line, we can expect with 80% or 75% success, because we got a success rate associated with all these patterns. So if your head and shoulder inverse headstand pattern has given you out of 300 study that this is successful 70% of the time, so what will happen? Probably price will come, and there is a possibility it will bounce from there. Let's see what happens. So here we got a typical type of NP Financials way of defining bar to buy, bar by bar, That is our strength. And what is this bar, or what is this candle, especially to the newcomers, Sunil, Gautam, and all of you? What is this bar known as at NP Financials when the close is near to the low and at a support? What is this bar? There is no right or wrong answer, only an answer.
All buyers in.
Yeah, all buyers in. Yeah, very good, Gautam. Or we have actually named it as, or which is the opposite of all buyers in, is all sellers out.
Sellers out. Yeah.
Yeah, all sellers out. All sellers out. That means no one is selling here, everyone is buying. That's what Gautam said and got 100 out of 100. Yeah, so even if this small line can actually support, and we can buy from here, and then we can see what happened here. This immediately a piercing happened. Those of you who are studying candlesticks, a piercing happened on the support, and actually there is skyrocketed to our target, which is here. Let's see whether it does it not. See, it is playing between the diagonal, between the quarterly line here. It got a rejection. It got a rejection. Means what? Means if we start believing now the chat GPT, not yet, I think. It's difficult for it, I think. So even if they saw robots, it's selling. What they do actually, they have their own lines of support and resistance, and then they have a pending sell order. Pending sell order at this point 124.35. Because why? Because they got success while they sold this instrument at 124.35. So this is the supply zone. This is the zone of supply. They will sell, and when the robots sell, institutions start sell, mutual funds start selling, we also sell. Then this bar will happen. But the actual professionals are selling at this point 124.35. Similarly, when 124.35 come here, again a sell. This is more due to the automatic trading. This is more due to the robotic trading. That is more due to the non-discretionary trading. But we, as a discretionary trader, we know what they do, because with our association, long-term association with them, we actually know what they do, what the quant do, how the quant actually program, how the quant actually executes their order. And we have seen physically how they are hooked up to the computer, even if they claim themselves they are quant, and their robots are actually running the trade, but they are hooked more than us, who are the non-discretionary trader. So these sell-offs to the newcomer, especially, these sell-offs are nothing but the robots or the automated trading, which is possibly trying to sell. And then yeah, so this not yet reached our profit target, which is around here. So let's see. So it play again. There is a diagonal. Sorry, not diagonal, horizontal line, quarterly line. As you can see, the quants or the robots are buying. So they are selling, they are buying, because price is in a range. So up, down, impulsive up, corrective down, impulsive up, corrective down. You can hear Marty demonstrating this much better than me. And it came down from this impulsive up. We call it a phenomena at NP Financials. What is that? When it cracks and then do something, what is it? For these newcomers, yeah?
Crack and snap back.
Fantastic, brilliant. Crack and snapback, brilliant. So really very good. I'm so pleased that you are remembering everything. All right. So it cracked the previous support, which is the quarterly support. What you can do, you can while configuring, you can actually write quarterly support, and you can say display price, blah blah blah. Anywhere you can say that you can display price here, or you can display price there, anywhere. This is a you can play around with the software. You cannot break it. Sure. So just a crack and snapback, and exactly cracked and found a support at the yearly. As you can see, configure, you can write it yearly, whatever. I have written just Q and Y, and it bounced from the corner. So this is magic, absolute magic. From this rejection, from to this all sellers out, as Sri said, all sellers out, and then we got a buying opportunity. So buying opportunity there, because it is a yearly support. Price is like water; it will flow along the least resistant path, like water flows in the least resistance path. So price also flows up or down. Of course, water cannot flow up unless and until you're using a pump, but price can go up and down. So if it is going up and then it finds a resistance, it will go down. If it is going down, it finds a floor in the form of yearly support, it will go up. So these are the zone of demand zone and supply zone. So as of now, as we are speaking, I think it reached the head and shoulder. See, yeah, that's very good. The head and shoulder, which started from the, it took some time, which actually started from 26th of September. 26th of September, the formation started from the all-time low. It actually matured when this was four things happened, and you know the four things. And can anyone explain what are the four things happened here on this date of 25th of October on this neckline from NP Financial's perspective, please? Why price went up? What are the four things happened here? Everyone knows. Please tell me, because I forgot.
So it was touched,
Yeah,
and it was
touch. Yeah, number
uh,
one is
it
touch.
was
Yeah,
on the there was a support.
yeah, touch the support line. That was
Yes,
correct.
and
Girija,
there
yeah.
was the high taken out,
No,
and it
before
was
that,
preferably, sorry, it was preferably it is going up. Sorry,
bullish bar.
yeah,
Bullish bar.
bullish bar,
Yeah.
and yes,
And
so
the
it was
second one,
high
and the
taken out.
second one, after touch, what should happen?
So after touch, it should be like it will be the preferably bullish.
No, no, that is the third point. The second point is it has touched the line.
Touch,
So that is
yes.
number one. And the second is most important. What is the second one? You are telling the third and fourth, but you are
Yes,
missing the second one. So what is the second rule?
it's totally out from my mind.
Yeah, yeah. Sri said close
The touch
above. Yeah,
and
close above.
preferably.
So it touched,
Yes,
as
yes, it's
Girija said, touched. As veteran trader Sri says, closed above. And then Girija and Sri, both of you said preferably bullish bar. It is a bullish bar,
yes,
and high taken out. It should be high
yes,
taken. Those of you who are loving candlestick, they can see the same thing on the candlestick. So so candlestick, is it easy to say that this is a bullish bar, bullish candle, because it is a green color. All right. So touch, close above, a bullish candle, and then high taken out. Yeah. So what happened on the 25th of October 2022 last year actually got the outcome here on yesterday. That means on the last business day or the trading day, which is 5th of May. As you can see, now that it has touched the line, we can expect two things. It has also already touched. It has closed above and bullish bar, and possibly continue to go up, or it can do a crack and snapback. Yeah, it can do two things. So that's what from the GBP USD perspective, what got started from the day we on the 26th of September, when it started the all-time low, and then we got the trade matured and hit our profit target today on 5th of May, which we discuss most of the time, which we discuss in our asset class evaluations and under Forex. So we have asset class evaluations under Forex, where whatever we see or whatever market is showing us, like this type of things, head and shoulder, double bottom, double top, because people will forget it is easy to forget the first lesson, like the trader foundation. So the trader foundation was the first relation of the 9 hours. People tend to forget. If they forget, then what we do, we don't want them to forget. That's why we give all the trade ideas. As you can see, we give all the trade ideas based only on the foundation course, like the breakout, like the bounce, like the patterns, all for the last 7 years. That's what we are doing. We are giving only trade ideas, sharing trade ideas from the not the forbidden, forgotten zone. Yeah. So people forget this zone, and then they forget what was actually captured on this foundation course, and that's why we actually remind them that we discussed all these things in our trader foundation. Apart from the strategy which are discussed in our beginners, advanced, and professional courses, the strategy will tell you everything. uh, but in addition to the strategies which are discussed in our Forex beginners, for the daily and the 2 day, advanced for the 12 hourly, and the professionals for the 4 hourly, and share trading commodity trading for the daily. And we have one within us in the name of Vic or Venkatesh, who is actually trading his own hard-earned money in what is that, self-managed super fund, SMSF. Yeah, only using our education and strategy. I'll ask in this forum Venkatesh to share his experience. Venkatesh, please, would you like to enlighten us on your trading on your own SMSF through our strategies? You can unmute and talk.
Sorry, yes, Partha.
Yeah, yeah.
Yes, I did go through the course for the share, just for the shares. The main reason is because the SMSF only allows for the share trading. So now I'm actually trading on the ComSec. Once again, SMSF has got a lot of regulations, so I had to trade on the ComSec, trading both ASX market as well as US market, using just the NP financial techniques. So Partha spent a lot of time with me, and then he introduced me for the trading platform, and also set up the trading platform in such a way that it made it much easier for me to do the trading based on his explanation and strategies.
Thank you so very much. Really appreciate, Venkatesh. It gives all of us a lot of confidence to trade the strategies and trade the ideas, because you are trading your own SMSF through our strategies. It's really tremendous to hear from you. Thank you so very much. All right, so that was on the sterling. Do you have any questions on the sterling, where we discussed a couple of things? We discussed about the supply zone, we discussed about demand zone, we discussed about crack and snapback, we discussed about the 4 rules of NP financials, and a couple of more of them. So do you have any questions?
Yes, Partha.
Go.
You have your target, which you drew from your inverse head and shoulders.
Yeah.
Where the price seems to be crossing right now.
Yeah.
What's your plan of attack going forward?
Fantastic. Brilliant question. So, all right. So everyone understood what Marty asked? Yes, no, don't know, don't, not interested.
Yes.
Yes. All right. Very good. All right. So Marty asked that once we have the head and shoulder here, which is 1 pip above the neckline. So this is the neckline, because this is the head, right shoulder, left shoulder. You have to draw it properly. Yeah, you cannot draw anywhere to anywhere. You cannot draw from here to here. You have to properly draw it, and make sure that the line which is drawn from the head to the right shoulder is not broken. Yeah, not broken. So let me draw that to answer that question. So from the head, even if you are confused that you are not getting the low of it, what you can do actually, you can move the H a little bit down, so that you exactly know where the head is, and you can move this a little bit up, this line. Yeah. And you can make sure that the low of this is 103.28. So whenever you are drawing a line 103.28, I hope so, 103.28 to this point. If you are not sure, what you can do, right click and then right click and then see where it has started. This is very, very, very important, because see this 123.28, because we are drawing it manually. This 123.08, where the line started, actually has to match with the low of this low of this inverse head. That is extremely important, because in Goldman Sachs, these lines are drawn by their $1 million computers, but these lines we have to draw ourselves. Yeah. So that is why it is so important. That is why it is so important. So now that we have drawn these lines and we have the neckline, we are waiting for 1 pip above the line for the price to go and place a trade. So the line here is 113.68. We go only up to 4 decimal place for for USD related currency pairs. So 113.68, this thing should be our order, pending order, stop buy order should be at 113.68. 69 or 70 on 1370. So when you are putting this, you have a target here, whatever the target is. Let me point it out. So price, and the price is 126.22. That's a big one. That's a very big one, because from 113.72 to 126.22, so 126 minus 1,300 points. Of course, it will take time. It will not be completed within a week. Of course, it will take time, but at least we are. So Marty is asking, while we are waiting for the 80% probability success of this price to go hit our 1,300 points, what to do, how to take advantage of it. There are a couple of many different ways which we discuss in our beginners, advanced, and professionals, and our monthly master class, as we are doing. Fantastic question, Marty. How to take advantage of it. So, so we don't know the right hand side. We are entering here. No one knows the right hand side. So we are entering here. But if we have missed this entire structure, or you have drawn it incorrectly, then how to take advantage of this potential movement, which Marty has discussed for Euro USD in his Elliott wave from time to time, GBP USD from Goldman Sachs, everything, and now he is discussing a very important point, which is gold. Oh my goodness, he has analyzed this study from the market from 1900. 1915, 1915 to 2023. He has analyzed this much time, more than a century, to give us his analysis of 1 2 3 4 5. But don't go tomorrow and start selling gold unless and until hearing out Marty, yeah, or you are consulting Marty, yeah. Right. So in those things what we discussed in our foundation, beginners, advanced, and Elliott wave, all those things, we tell you how to take advantage of the basic thing. The basic thing, if you are doing a daily strategy, the basic element which we use, we actually use a thing called pivot point, which is monthly, and we use another one, which is a moving average. Is two. These are the two basic things everyone should have, and we always have: monthly pivot points and moving average. So let's try 200 exponential on close. No, don't do anything rubbish like all these things. Yeah, just do on the close on the exponential. Don't go the triangular, all those things. So please do not reinvent the wheel. All right, exponential close. Because why? Because Paul Tudor Jones, also who is a billionaire hedge fund manager, he also follows this exponential moving average 200. As per him, if you have studied his literature or his biography, he would say above 200 is buying opportunity, below 200 is selling opportunity. That is his basic thinking. So we'll take advantage of that. So we have a 200 period moving average, and we have a pivot point. So the first thing how we can take advantage is we can actually use our pivot point structure. So if it is bouncing from the pivot or doing a crack and snapback from the pivot, we can buy. Because we are 80% success, we 80% probable that it is going to hit our target. So let's see what can be the first trade after we have taken this trade. Am I on this correct point of discussion, Marty?
Yep.
Yeah, fantastic. So now this is a beautiful opportunity on the pivot monthly, as you can see. And although we are fond of pivot point for last 13 years, Marty introduced us with a concept called yearly. So because the question is coming from him, with due respect, I will bring the pivot points, which is yearly magic. Yeah, so we have yearly support 4, support 3, resistance 4, resistance 3, pivot point, blah 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 blah, which we discussed in our Trader Foundation course. So we have a yearly support here, so which is the last support. Support 4 is the last support. Of course, it can go to support 10, but I have not seen it. Maybe once in 12 years. But support 3, support 4 are good enough. So what we are seeing here, we are seeing a tremendous bounce. That means from this zone of demand, which is a pivot point. Pivot point is the first demand zone. So we place. What does it mean? It means the robots or the so-called non-discretionary traders, uh, quants are buying, are placing the buy order at this point, or the mutual fund managers are placing the buy order at this point, which is the pivot 110.78. So this can be our one. Number two, supposing we are not so professional, then we can actually wait for the bounce and see this formation of the candlestick and buy when the high is taken out. What is this formation of this candlestick? One bar and three bar combined together. Tell me. First tell me one bar and next tell me the three bar combination.
One bar is hammer and the three bar is the
Morning star.
morning
Brilliant,
star.
exceptional, fantastic. You are really doing good on your practice task, Gautam. Gautam is very new, and yeah, please, great, big applause for Gautam, because he has answered 3 questions so far, and he has answered all of them correctly. So this is a hammer. Promise support. So after a downtrend, so this is after a downtrend, we can call it impulsive corrective, impulsive correct, little bit, but Marty is just all but on that. I'm not going that way, but we can say that of course this is a downtrend, and this hammer is coming on the right dot on the support. So pivot point, hammer, and bull, and this is a beautiful morning star, and then we can buy. Second opportunity is to buy. I'm answering Marty's question. We bought. If we buy here, our first target is R1 minus 10, or moving average itself, or quarterly minus 20, all those things as per our study, which is discussed in our beginners course. Those of you who are putting the take profit target like Ben and Girija, please be mindful of these targets. Yeah. All right. We are in the trade. My goodness, look at going, and look at this one. Look at this one. So that was the magic. I told you, if you have gone long here, don't panic here. Don't panic here, because it can break one, it cannot break two. One more rule which we have follow in our NP financials is it can break one, it cannot break two. It is valid for bar to bar, it is valid for swing to swing, it is valid for line to line. So what are the lines it is breaking? It is breaking this line, which is the neckline, but we have the another line which is pivot and S1 put together. So we can when we are seeing this one, which is probably, if you drop a Fibonacci from here to here, it will be 78.6. Then we can expect a crack and snap back. So it can break this line, but it cannot break two. Of course it can break and go to zero. But in that case, we'll close the trade. But our understanding with a very high probability that it can break one, cannot break two, will give us an opportunity to buy here. So one buy, we did this on the first one, we did it on this one here, which is the 1 pip above the line. Second one, we did it on here on the hammer, either on the pivot point or high taken out. And the third one, we are doing it on this one as a all sellers out, and it can break one, cannot break two. Are you getting confidence so far? So far, Marty or anyone having any questions?
Yep, all confident.
Fantastic, brilliant. Ben is that master of Fibonacci, and he would probably draw from Fibonacci from here to here to see the exact 78.6. As you can see, first dotted line is 61.8 and then 78.6. Yeah, so it is bouncing from the 78.6. Even if you do not draw, if you have drawn a million times from here to here, then from here to here 61.8. See 6. And from here to here 38 or 50. If I bring the line, let me try my own this thing, practice task. 38.2 dot. Unbelievable. All right, 38.2. So it bounced from the 38.2, and then we can buy. All right, what is this? Now those of you who have not gone to that expertise level which Ben has achieved, his Fibonacci I'm seeing for last 10 months, is brilliant. And those of you who are not got confidence on the Fibonacci because you have not drawn much, and not going from this, it can break one, cannot break two, as Ben probably can go do. Ben, any comment on this Fibonacci? The one I have drawn, is it correct, wrong? What is your opinion?
No, I think it's good actually. The Fibonacci from multiple points, you get confluence across all of it. So yeah, that's what I would do.
Fantastic, brilliant. Ben talked about two things, not only Fibonacci correctly drawn, but also confluence. Why he said confluence? Because I showed one Fibonacci from here to the same reference point, second Fibonacci from here to the same reference point, third Fibonacci from here to the same reference point, following all the rules of multiple Fibonacci confluence. On that multiple Fibonacci confluence of 38.2, 78.6, and 61.8, we got another tremendous bullish reversal pattern candlestick. What is this? Please talk, because this meat is hiding, so I cannot read at the
Piercing.
same time. So please talk. Yeah, go.
Piercing.
Oh, wow. This is piercing. Absolutely right. So if you don't want this writing, what you can do, if this is bothering you, you can go to settings and then take that writing out. So writing is gone. Oh my God. Gautam, another good sixer. So 100 out of 100. Yeah. This is piercing. This is 100% piercing, because this fellow did not close above the above the body of this. So this is piercing. So if you have missed this professional entry, of course you can enter here on the piercing as you enter on this hammer. All right. So I'm answering questions from Marty, and I'll not repeat what I said already. So I said to buy from the pivot. So you can buy from this pivot. Don't think this is an evening star. Who thinks that this is the evening star and start selling? Why we should not think this is an evening star, and why we should not think this is a bearish engulfing, and why we should not start selling? Answers from you. As I told you, we'll be talking less. We'll hear you more. So please.
Because it's not at the resistance level. It is still in the midway. Yeah.
100 out of 100, because we don't sell the support. We never sell the support. We never sell the support. We will not sell here, will not sell here, will not sell here, will not sell here. That is because we'll only sell at the resistance. When there is a resistance, let it be. There's some resistance here, something I don't know where it is on the yeah. So this is a resistance pivot, yearly pivot, and move. Oh my goodness, look at this setup. The kissing of moving average along with the yearly pivot. So whenever you are using yearly pivot, please make sure that the moving average is 200. Whenever you are using monthly pivot, make sure that is 50. Yeah, so that's a brilliant top class. Our pivot point and moving average kissing each other during the start of the year or during the start of the month. Alright. So we got another one which we can go long here. If you have missed this one, you can of course buy there. So you can buy there. We are only buying on the support. So bought at what is this pivot, bought at Fibonacci or the neckline, bought at pivot, or bought at candlestick, bought at candlestick. Of course, our histograms, of course, will tell us where to buy. Our histograms which are discussed, don't forget about that. On the beginners, our buy sell histograms will tell you, the strategy will tell you, but I'm doing a naked bar by bar analysis to answer your question. Now the third one, this is a difficult one. Third one is a what is this? This is a yearly resistance. Yeah, at that point that was an yearly resistance. So let me make this as red, because at that point price has not crossed. So should we, if we so first, there are two questions to you. So do we start selling? So do we start booking profit? So do we start selling? These are the two questions. And if we start selling, where should our sell order be, please? Anyone, everyone who are
Yeah,
following rule of 4, go.
Would it be 10 pips below the low of that candle that you're on right there now? Below
Fantastic. Fantastic. Because it is a kind of evening star and the yearly resistance. So we'll possibly sell at this point, which is 117.10 minus 10. So 117.00. Oh my God, 00. Don't do that. Do 10 more points. So it will. If I'm you, then possibly I'll put a trade sell stop order at 116.80. 80, because that 1700 can be dangerous. Alright, so we have put an order at 1700 or at 1680. Let's see what happens. It did not trigger the order, isn't it? It did not trigger the order. So this is a false setup, and it did close above and possibly high taken out. And in this case also, if you are selling, so what should we do? If we first of all, and if we are booking profit or selling, what should happen to sell? Next question. Or buying, whatever. I may be wrong, so you may correct me that no, I'm buying. What should happen for buy or sell? Tell me. Because the more you interact, the more clarity you will get. I'm only answering Marty's question. That's it.
Yeah, Partha, if you were to buy at that point there, would you be waiting for a close above the 200 EMA?
Absolutely, 100%. Absolutely. Ben said, if I have to buy, then either I have to buy at this close above the 200, because what can happen is a crack and snap back. It can crack the yearly like 200. Can be a dangerous support resistance, as we saw. This is yearly. Yeah, this is the confirm lines. The firm lines are the yearly. The dash lines are the quarterly, and the dotted lines are the monthly. Yeah, so that's fantastic. So we are not buying. So now the yearly is becoming support. So we can change as long as this line is becoming a support. That's a polarity change. So we can do this polarity change the color, so that we are at least manually mentally satisfied, or we can take help of Kerry Brown. See this support here. So this support here. See this support here. Yeah, it not only getting a support from the yearly, but also R1 resistance 1. I think so. If I give a name here, it will be resistance 1. So it will get a resistance 1. Either you can buy here now that it has closed above the yearly support 6 days in a row. You can buy on this one, touch close above high taken out, or you can wait for the 100. Probably I'll buy here. Anyone want to object to buy here, because I don't believe the yearly support? Anyone?
No
There's a
objections.
long wick at the top of one of the candles, which may,
This one.
yeah. So I don't like that one. So it's not a buy.
This is Robi, yeah, Robi Bhatia
Yes,
speaking.
yes, yeah.
And
So
someone
that
else
long,
also. Yeah, he's talking about this long upper shadow, upper wick,
correct,
yeah,
correct.
which represents the selling pressure. All right. So someone else also wants to say something, please.
All
Two of
good.
you started. Yeah, go.
All good, Partha.
Someone
Continue.
else. Huh?
It was me. I'm all
Okay.
happy. Continue.
So you are happy to buy here because of the support you are getting from the yearly?
No.
No. So you want to wait for the 200 to be cleared, yeah?
I'm just more interested on what happens when you actually are on that target, when you've actually closed above it
On this target or on the big target?
on the big target.
Big target. So if you are concentrating how to book profit on the big target, I would say don't do anything. Don't suppose we always say take 3 trades and close one by one. So we say 1/3 is closed here, 1/3 is closed there, and the 1/3 is closed there. So 1/3. We are a strong believer of 1/3. If you have taken 3 trades or 0.3 trades, mini lot, micro lot 0.3, I think 0.03, micro lot 0.03, mini lot 0.3, or standard lot 3. If you have, I believe in 3, because that's a good one. Yeah, if you have taken 3 lots, don't do anything on that big one. But at the same time, you can keep on adding. If you can keep on adding to your 3, you can add 1 here, you can add 1 here, you can add 1 here. So if you have added 1 1 1 or 0.1 0.1 0.1, depending on your account size, 0.1 0.1 0.1, then you can close 1/3 of these 3. That means you are closing one of them and allowing 2 of them, because it is getting a support here, and you can close 1 here. So you are running 3 of them. Did I answer your question?
Yep.
All right, let's see what happened after that. Yeah, now Ben, as per Ben, he's probably entering here on this one. So we can have another entry, or those of you who wants to close the trades before the weekend or before the month end, they can consider closing the trades on this kind of all buyers out, because it is at a R2 resistance 2, all buyers out, and at a 200. So crack and snapback can happen. So if you are running 3 trades, don't touch this one. If you are running 3 trades, you can close another one. So if you have closed one and you have closed another one, you are running only one. Now you have got a possible crack and snapback. Everyone agrees?
Yes.
Yeah. So now if this is taken out by 20, because it did not close below the quarterly, did it? The quarterly is at 119.48 and the close is at 119.59. So the close is above the quarterly. Because it break one, it did not break two. So what we can do, we can actually wait for this break, or because we are running good profit, we can actually go close all our running. Only one trade is running, so we can close our trade either here, because Sunday bar generally the people are not having this Sunday bar. Because this is a crack and snapback, we can close here minus 20. Or if you are not having a Sunday bar, then possibly you are closing the trade this one low minus 20, which is 119.20. Let's see what happened to that. This one 119.20. Yeah, we are out of this trade. But the big one is still running, and you can still add on your trades like this one, like we added here, did not actually work. We added on the assumption of this quarterly support, but the price came down little bit flat, a little bit down, so we are out. Then if you have closed all these trades, then you can enter here, because it has crossed 3 of them, the quarterly, the 200, and the R2. For this month you have 2 trades, which is the October. For this month you have 3 trades which did not work. One of them did not work. For this month, which is November, you have 1 trade, because it has broken 1, 2, 3. So now you have 1 trade for the month of November. Generally 3 trades per month per currency pair. Those of you who are doing back testing would say, tell me whether I'm correct or wrong, is good enough. I think Ben has back tested 300 entries. And what is your finding, Ben? How many opportunities as per the strategy you got per month?
The most I get on a trend for a month is probably 1 or 2. Actually, I'm a bit more nervous on my entries, and I'm probably a little bit. I'll probably pull out of my entries a lot quicker, particularly if I hit round numbers or buyers out or sellers out bars. But yeah, about two a month.
And yeah, 2 or 3 months. Fantastic. And honestly, Ben said people who are starting can panic, and then they close the trades early or close their trades at round numbers. Anyone who are trading for a very long time, anyone wants to help Ben on this, his problem of panicking or fearing or closing at round number? Anyone wants to share their own experience, please? Nothing is wrong or right in trading. Only thing right and wrong is whatever is making money. That's it. Anyone wants to help? Ben, yeah, go.
Probably use a position size that's small, that it doesn't worry you at all. So you're not even concerned if it gets stopped out or it goes to your take profit target.
Yeah, absolutely. Brilliant. Good advice. Ben, Marty, do you have any question to Marty, Ben?
No, I don't think so at this stage. It just takes a lot of experience, and I know it's just a matter of keep on looking at the charts and keep practicing, and confidence will come.
Absolutely correct. What I would say, in addition to what Marty said, my 2 cents is, don't even if you are panic, panicking, even if you are panicking, don't show it on your trade. So if you are panicking, on this one, oh my god, a big one, let me take the profit here, otherwise I'll be ruined. Even if you are panicking here, or even if you are panicking there on this one, I would say don't transform that panic into reality. In reality is follow the rule. That's it. The reality is follow the rule of 4. The reality is follow the rule of crack and snapback. Reality is follow the rule of this is resistance to MR2 minus 20. Will it help, Ben, if you follow the rule and get out? Because it
Yeah,
will also help Girija, who is doing almost 180 entries. Yeah, Ben?
yeah, it would. Yeah, I
I
just get
want
to
to
that.
add something, sir and Ben.
Go.
Ben, whenever I'm just practicing right now, with my targets and everything. So I'm just simply that's what I always do. I just simply follow the targets, like what I'm target, and then because I know that I'm not into the live entries, so I don't need to like even panic. But even when I'm doing into the daily, that's what I'm practicing in more like daily and 2 days. I'm just simply checking it after my time. I'm not even like sitting all day on that, which giving me a little bit more confidence about like what am I studying and what am I putting it into that. It's actually comes out. So there was a panic stage before, even I wasn't even into the live chatting or anything, but now it's just getting better and better with the time. So all I'm doing whenever I'm so good at forgetting things, I tell you. So I'm just simply go back to my lessons, studying again, coming back to the charts, and that's how I'm practicing.
Brilliant, fantastic, fantastic. Very good. Now, let us take this opportunity to hear from someone who is actually trading the SMSF, his own superannuation fund.
One question, Partha, before we go there,
Yeah.
just on here, like I mean, since I haven't started anything yet, I'm still learning.
Mhm.
But the likes of Kirja, Ben, and you guys, like let's say for example, if you want to take a decision at this particular point, like whether to buy or sell, don't you use another indicator as a confirmation? Like I mean, like in our learning, Partha, we use like price line and trend detectors and Bollingers and other stuff to have a double confirmation that yeah, perfect. So the candlestick patterns are making sense. It is at a support or resistance level, so it is okay, a probable signal. But we have another indicator as well, which is like in elements of forex trading, like that indicator is also suggesting to go long or short. So that way we have a double confirmation and we can be more confident, isn't
100%,
this
100. That exactly what we'll be doing. That exactly what we'll be doing, and that is a one-on-one session. So we cannot divulge everything on the this master class. So
right?
that
Yeah,
one-on-one
yeah.
session
No, I
is
understand. What I was saying is like, like since we were discussing that particular chart and we were like, thinking that, whether to go ahead or not, or, what to do. So at that point of time, we can use another detector as another indicator and then have some more confidence, right?
yeah, 100%.
As a
We
as an
use
individual.
actually
Yeah.
five of them. We actually use five of them. One is our own histogram, and one is our line chart, and one is our own trend detector, and the
Right.
other one we are using as the momentum of the 2 day, 3 day, 4 day, 5 day. So
Right.
these are the
Right.
four things which we use
Mhm.
before our signal is generated in the form of a histogram here.
Right. Right. Right.
Yeah.
Because when you combine, those even if like there are two or three indicators which is going positively in your opinion, or like or logic,
Mm.
then it is fairly like I would
Mm.
say safe.
Yeah.
Yeah. Okay.
Best thing, very good question. To answer that question, we always follow this strategy, which is which is a combination of four different things. Whether the buyers are willing, whether the buyers are committed, whether the buyers are controlling the market, whether the buyers are eager to sell buy the market, or the reverse. What you need to do, you have to go to the 23rd of November. Remember this, and go to the forex trading this thing under console forex trading section, and see what is our forex trading is on that 23rd of November setup is telling. That's what we always say. uh, when we capture this commodity shares and forex, we always say, if I have to, if you allow me to go to our traders breakout room just to answer your question, we always say that the update has been posted, like the April setups are posted. April setups are posted for the forex commodity and shares. So what we always say on the breakout room, that please go and check. Don't have this error. Please go and check. Please go and check your own tradings, whether you have taken this or not, in line with our, yeah, this is the one I wanted to tell you. So please go through the setups and match it with yours. That means the strategy is the same. The strategy is the same. So now what you have to do in the forex trading model, so you have to go to the forex trading and match up with your own. That means your your setups, or your taking profit, or your everything is dependent on your personality, your risk appetite, your greed and fear. So what do we need to do on that 23rd of November? You have to go to the November and see what the original strategy, which is a combination of 5 things which I told you and you asked. So we'll go to that November quickly, learn more, load more, and we'll see what our strategy has generated. This is the beauty, because this is a database of 8 years, 7 to 8 years. 7 to 8 years. So you can go now. We are in December. We are almost there. October. So November, GBP USD. Now December. What happened to November? I think we were in, yeah, we are in India, something like that. So it was not there, but we can match any other thing. So for example, let's see this one, what we did in October. What we did in October for the GBP USD will be there. So GBP USD October. So let's do GBP USD October. GBP USD October. Yeah. So what we did for the GBP USD October, we only bought one of them here, because this one is opposite line chart, and this was the reward to risk ratio problem. So we bought only one here, and the other one is sold here. So there are two sample setups. So this way, you can actually match each one of your trade with what the strategy has generated. Did I answer your question, Gautam?
Oh yeah, definitely.
Yeah. So we are doing that,
Hence that
and
your
this
logic is going in line with the
that's
strategy. Yeah,
that
yeah,
exactly correct.
yeah.
And if we see the same repetition of this support, resistance become a support, like polarity change, like this resistance, yearly resistance got support, like same thing happened here on the moving average. Red means resistance. When the resistance become a support, green means support, we again buy. So we this way we actually can continue to buy and manage our trades. Like if we are running these 1 2 trades, or 1 2 trades, we can actually close a half of it. Supposing we have 2 trades in a month, not 3, as Ben said, we can actually close half of it, and then wait for the other one to close below the 200, and then low taken out. A rule of 4 should happen, and it did not. Look at this magic, not a single one closed below the 200. How good is that? So this is the polarity change, and the demand and supply zone, and the respect of the 200 moving average along with the pivot points, which will give us what to do when, what not to do, panic, or what to how to handle a long term trade, or how to break the long term trade and take the short term trade. So I try to answer your question, Marty. Do you have any question?
No, no question.
Fantastic. So if I'll probably do one more. Let's do. I think Marty will do euro and gold, uh, and some other things he will do. Which okay? You ask me which currency pair, or which instrument, or which asset class should I do in next 5 minutes before I hand it over to Marty for his brilliant Elliott wave analysis.
Indices, Martha.
Indices, which one?
S&P 500.
Fantastic. SPTRD. S&P 500 is generally known as SPTRD 90 Finance Real Time. Otherwise, it is known as SPX 500. So this one, we'll use this one. They are saying this is the best inflation they can actually have, because in inflation price is going up. This India, everything is going up from the Omicron high of this, after the COVID disaster, from this Omicron high, or whatever it is, the R2 resistance. I would pay more attention to yearly resistance too than Omicron. But Omicron had a effect on 3 times on S&P, and after that it went up to the R2. Here we can see, and there is a monthly R2 also. So this is a small monthly R2 for the month of December, a resistance 2, and this is a yearly resistance 2. After this, it is coming down. After this it is coming down, and it did a big double bottom in front of you. Those of you like Sunil who are doing double bottom, double top. Sunil, how is it going?
Yeah, it is fantastic. I'm practicing, and it is very effective actually for
Yeah.
the back testing. Yeah.
Fantastic, brilliant. Thank you for that.
Yeah,
So
thank
after this brilliant double bottom, what price is doing? All right. So what we can do, either we can take advantage of the big one, or we can always we always prefer to have the small recent ones. So while we are here, we'll be concentrating on this one. Of course, in the bigger time, it will look like that is a double bottom. I'll not do that, because at NB Financials we do not do that. We do only the small ones. So this one will do this, and then this is the neckline, single line. So what we'll be doing, we'll be putting a target. So we'll be drawing a line, vertical line, from this one to this one here. And then we'll go to copy this vertical line and paste it after price has crossed 1 pip. Let's see when the price is crossing 1 pip. Yeah, it has crossed 1 pip above the line. We'll place it here. We'll place it exactly on that one line. So our target is here 4130. I'm trying to answer Venkatesh question. So double bottom always generally gets followed with a head and shoulder. So we can say that this inverted head and shoulder, in this case headstand, one head, left shoulder, right shoulder, and this will be the neckline, all which is almost the same. Yeah, and I know this is probably I would just say this one. Okay, let's take with this. Let's take with this one, the double bottom, and our target is 4135 is. So let's see. Let's draw a line there so that we are not missing the target. Okay. Look at this fellow. Look at this fellow. The target hit actually got hit. Boom, boom. So the technical people who are buying from here, when respecting the head to the right hand shoulder line, is not broken. So are getting this target here. In head and shoulder, I would say possibly observe the market or put a target here. Otherwise, you can keep on trailing the target. Like close below, it can break one, cannot break two, something like that. All right. So, and then what we are seeing here, by this time I'll be definitely joining this channel here, standard deviation channel. Initially it would be from here to here, then it automatically adjusted to there, automatically adjusted there, automatically adjusted there. So the advantage of standard deviation channel or standard error channel, they automatically adjust it when the bar closes. So that will be having that. So let's see, we are having this one as of now. So Venkatesh is asking what is happening now. So let's see what is happening now. All right. So if I have to answer what is happening now, then I'll probably try to quickly see what the yearly doing and monthly doing. Of course, the yearly is trying to do recover from this the tremendous piercing, dark cloud cover, and the quarterly is three black crows we can see, but a little bit of a retracement. I did not close above one. This is one. It did not close above one. All these things should be there. And then the monthly is probably doing a 50% retracement as per my understanding, or maybe, yeah, I think 50%. So let's do from here to here and then bring the 50%. Generally I do 50% is here. So take this out, take this out, take this out. Display price, yeah, 50% display price 4153 dot. So that is the background. Before doing anything, you should have a yearly, quarterly, and monthly perspective. So now that I have a yearly, quarterly, monthly perspective, I don't have to go to weekly. You can straightly go to daily, because we don't draw lines on the weekly. So what the S&P is doing now on this is it is getting a sell here on the 50%, on the 50% here on the first time. As you can see, 50% was here. We have drawn the Fibonacci from. We have drawn the Fibonacci. Where did the Fibonacci go? This one. This one, this one, this one, this one, this one, this one. A long Fibonacci, big Fibonacci. All right. So big Fibonacci, we have got a 50% sell off at during this time with February, and it came down. And then after the February, we are having now interesting, very interesting. We have this 50% sell off, if you want to say that way, for three times now. One here did not do anything except this all buyers out, which is the 14th April. Second one here with a engulfing and a kind of not very good one, evening star, and then a good evening star. So three times it getting selling off. So don't think that this is a morning star, because this is not after a downtrend. uh, I would not say this is a downtrend, this is a retracement. But don't think that this is an engulfing. That's the mistake people do. Don't think this is a bullish engulfing. Don't think that this is a bullish piercing, because we are approaching the resistance. When we are approaching the resistance, we should not do that. So my analysis before I go is to answer this question is, we'd probably wait for this fellow small standard deviation channel to be close below low taken out, how much pips to be low taken out when it was not successful here. This low also close below low taken out. This was only 14 pips, so at least 20 points, close below low taken out, 20 points to go short, or close above this quarterly and monthly Fibonacci and high taken out by 20 pips to the upside. Did I answer your question, Venkatesh?
Of course, Partha. Yes, you did. And when you are studying the chart, you make it look like very easy, but for us, it probably takes a bit longer to study this.
Yeah, of course. As Ben said, it is practice. Yeah. Okay, with all that, I request Marty to take us through with his brilliant analysis on Elliott wave. Over to you, Marty. Thank you.
Hello, everyone. How are we all doing today?
Good.
Oh, that's good. Okay, so I suppose I should share my screen. So over the course of this week, I got a little bit excited. So on, I believe it was Thursday.
Before that, Marty, everyone can see Marty's screen as well as hear him. Yes, we can.
Yeah.
Yep.
Okay. So I believe it was, okay, sorry, I will get my daily chart up. So we have this fellow here. So Wednesday morning in Australia, early morning. Now this one here took out our last all-time high on gold back in March. Okay, so I'll move this one. So being a big believer in Elliott wave, the whole 5 and 3 combination. So we count to 5, and then we have an ABC after it. Lets us know that this is a odd number here, an even number. So this is another odd number up here on the daily. So this is either a 1, a 3, or a 5 to complete the whole 5. So because this was such a major event, I decided to look further back in time to confirm what I was seeing, which bring me to this guy here. So this is all the history I could find on gold. My brokers didn't go back far enough, which I used, but at the end of the day, we still have from the start in April 1915, June 1915, Feb, it's still 1, 2, 3, 4, and we're doing our last 5th wave up here. Okay, so the 5 waves, we have 1, 2, 3, 4, and 5. Completed wave 1 with our A, B, C. Now this is going to be hard to see in this wave here, but this will be a small 1, a small 2, 3, a 4, and a 5. We've got our A, our B, and our C. Now we're on our last wave, the 5th wave. We have a 1, a 2, a 3, a 4. And now we're doing our last little 5th wave of the 5th wave. Now, because this is a yearly chart, and this is all the data I can find, this is what's known as a grand super cycle. And all these other little cycles are called super cycles. This will have 5 waves within this wave. That will be known as a cycle, and each other little cycle will be a minor cycle to a minute cycle, and so on. So at this point in time, this whole big super cycle is very close to coming to an end. Okay. So I'll go back just for a second. So if we look from December 2015, we can scope down and see what's going on a bit further with what our broker can show us with a bit more detail. So from 2015 in October, okay, here it is here. So I've got the 1. So there was 5 waves in here. We had an A, a B, and a C. We had 2. So our next 5 waves to make this green 3. 1, a 2, a 3, and a 4, and a 5 to complete our 3. And we had A, B, and C down for our green 4, which now changed this A out and this, oh no, this B out. So at this point in time, we are now doing our last little green wave 5 up, which completes this big green 3, 4, and then 5 up. So on this last little wave here, we can come down to our weekly time frame That's not enough detail there. So down here is our green 4. Just make sure. Yep, so that's our green 4 down here, which was this guy here. So I'll put one down here so we remember. So that's our 4. So being our last wave 5 up here of that grand cycle. Okay. Now in that last 5th wave up, we've got a 1, a 2 in blue. Now we have 3, which we are still doing. Okay, so we have this blue 1 and 2. So this blue 3rd wave has a green 1 and 2, a 3, a 4, and a 5 within it. I'd actually say that's probably done. Okay, so we have a 1 and a 2, and a 3 and a 4. So we're doing this last little 5th wave up to complete this blue 3. Okay, so meaning once this blue 3 is finished, we still have to do a blue wave 4, and then we have to do our last blue wave 5. Okay, so when this last blue 5 is complete, that's when that whole huge grand super cycle will be complete, and that's when we can start to look for a big short trade on gold. So by big, I would come down and look back at this graph here. So we've had a high of about $2,070. So we can easily go 50% of that. So it's at $1,035. But if we come down to all this stuff here, this is a theoretical target, which is hard to believe, about $400, $500. I know it's hard to believe, but as the theory suggests, and I do believe in the theory pretty strongly, I would at least see it come down to $1,800. No problem. I'd be confident in that very much after seeing this happen thousands of times before, but nothing like this. This is a big lifetime trade here. You probably won't see anything like this ever again. If you want to look at fundamentals, which is something I'm not very strong on, we have, I'm on it right now. So there's big news in America to avoid a default on the debt ceiling, meaning that America's coming under a lot of pressure at the moment. And we have Miss Janet Yellen from the IMF is telling them that they have to really do something about their debts. So maybe something they might consider is starting to get rid of all their gold. So maybe that could be something to trigger our trade, but we do need something huge like that to happen. So I'm wondering if anyone's got any questions or they want to see anything else.
So we'll have to wait for the 4 and then 5. So
yeah, so
the question will be, why is this 3 not the 5? So it is not. That's what you're saying, because you have a red 3, red 4, and you have a blue 3 and you have a blue 4. So what is the probability of that from collapsing from this whatever level it is now.
Okay.
To
So
the
I
level.
will scale down to my smaller time frame. So I have a 1 and a 2 and a 3 and a 4. So I want to see 5 waves completed here within this to confirm to me that that wave 3 would be finished, as well as this 5. So I'll come down into my smaller time frame. So this blue 3 and blue 4 was this little black 3 and this black 4. So 3, 4, we've only done 1, 2, and 3, and 4. So I would say we would come back up here first before we come down, all the way down. Okay, so
yeah.
So at this point in time, that's just a small 3. It's likely this is a smaller 4, and a 5 will come up here before we take this big dive down to around 1850 before we see our last little push upwards. So it will take some time before this huge trade happens, but I think it would happen before the end of the year. So something big would have to happen to trigger this.
Thank you.
I think another interesting trade to look at where I've changed my mind on is, so I'll come to Bitcoin later, but Ethereum. So again, we have that 1, 2, 3, 4, 5 with our A, B, and C. Okay. So we come back. 1, 2, 3, 4, 5 for a collapse. See a big collapse like this, that would be something I would be considering happening with gold. But with Ethereum, we've done A and B. Now I don't believe this C is finished yet. Why? We have A. If we look at this here, can anyone tell me what that is? No, don't think of any numbers or letters or anything at all, just from the Traders Foundation. What's this pattern?
Double top.
That's it. And would you call it a class A or a class B double top?
Class A.
That's it. As well as that, so this is a weekly time frame. Zoom in a little bit. So we got this big red candle here. And now we've had 1 and we've had 2. So what's that candlestick formation? Does anyone know the name of that one? So it's an
Morningstar.
it's an NPF special candle formation, that one.
Is it a bearish engulfing money?
The red one is, well, we've had two more candles which haven't come up here. So would you call that a cannot break 2? So we've come down. We've had 2 candles which haven't come up and broken the high of this or come close. So this would tell me this is another example to be looking short on this guy, meaning that with this big pattern here, this whole ABC downwards is not yet complete, meaning we are likely to come down even further below this point here. So if we look at it on a smaller time frame, we've got our A, B, and our C wave is complete by 1, 2, 3, 4, and 5 waves. So an Elliott wave pattern has been completed in here as well as your large A-class double top, where we have started to come down here. So if we come on to our 4 hour, so it's pretty likely our first minor wave down has been completed. Now 1, 2, 3, 4, and 5. With our A, B, and C up, it's quite possible we can continue moving down from here. So this is that cannot break 2 situation. So we can likely move down from here, but at the most we could come all the way up here before we reverse. So that's our worst case scenario, up to around here. But this looks ready. So by looking at this, and at the start of our lesson, I was looking at Bitcoin. So I had, this pattern's a little bit different. It's our A, B, plus 5. So this is telling me now that this 2 is not yet complete, where I would consider this whole correction all the way down here very much could still be going, meaning that we've got our A, our B, 1, 2, 3, quite likely 4 here, where we're right on the target. So if we go above this high here, I'm wrong. But I'm thinking this is a 1, a 2, a 3, a 4. So 5 has to come below this here. So even if this count is like this, where I have 5 waves up, which is likely wrong now, it doesn't really matter a damn, because we are going to come down anyway to do our ABC. So we could have a very tight target of somewhere around 20,500, or a good potential target below this guy here. So below 15,000. Anyone got any questions about the cryptocurrencies or anything like that? Any patterns they like?
Yeah, Marty, is Ethereum moving the same way as Bitcoin?
Well, after looking at it now, what has made me think that it is, why my count is wrong, is that Ethereum, so always look at your bigger time frames, so everything clears right up and you can see it really well. So it is very, well, it's clear that this is like some type of a flag pattern. And we all know through the Traders Foundation that that's a bearish sort of pattern. Okay, so this, to me, being, I think, is a clear pattern to recognize. So we had this flag pattern here, and Ethereum being pretty big in the crypto world, I would have always thought there would be some kind of correlation between this and Bitcoin, which is why I changed my analysis on Bitcoin from being where I thought this C had finished and we had started moving up, our big impulsive wave up. But now I'm not convinced, as I think this is still coming down as well. And as well as that, if it was shooting up as a wave 3, a blue 3, this here would be a much stronger angle. This would be on fire. It'd be something like this. So that's why I believe this angle is not strong enough. So we can look at this as maybe 60 degrees down, and this maybe like a 35, 40 degree up, where we would consider moving down once again. So that's how I would put Ethereum and Bitcoin together like that now. That answer your question, Ben?
Yeah, thanks, mate. Yeah, it does. Yeah, because usually they are very well correlated, aren't they?
Yes. I was sort of wondering why they weren't so much, but that had just confirmed that my analysis on Bitcoin was wrong. And if I put that a 4 here, it makes it very similar to the Ethereum analysis. So if you were to short Bitcoin, you would put your stop loss above here to come below here somewhere.
That's a very good reward to risk trade.
That's very good. Another one of interest, since there's a little bit of time, is oil. So this one caught me out this week from something I should have known, but oil again is this big impulsive wave up with a corrective down. Now what caught me off guard was I got my 3 here, which I've now put as a 3. I had it as 5 before, but now it is 3 because on every other broker, this low has been taken out. So that was my magenta 3 here. So that's 4. So 3 and 4. So on IG markets, this is lower. But at the end of the day, if I go down onto a daily or 4-hour time frame even, this count is still not finished coming down. We're still going to go lower than this fellow before we begin to move up. So even on IG markets, um, 1, 2, 3, 4, and 5, it's quite possible this is done. So US oil is not the same as US crude. Okay, so that's something to be aware of.
That's a really big difference between brokers. Which one do you trust the most?
So this is US crude. 8 cap is US oil. I believe they're two different things. As I looked on a few brokers with US Brent, and they all line up with this. And then I looked up a few brokers with US oil, and they all looked like this.
Yeah, okay. Thank you.
What else can we look at?
That's a great observation. Fantastic. Because generally people get confused between USO, USD and CL. CL being crude oil on the IG and USO, USD being the US oil on the 8 cap on other brokers. Yeah, that's a fantastic observation, Marty. Thank you for that.
Yes, because I got stopped out and I didn't realize why, because this chart was like this. I mean, what the hell? So I should have known. I know now.
Are they very different or similar or not at all?
This is the first time I've picked up a different wave count.
First time, yeah. Generally, they behave the same, isn't it? Because crude is a byproduct of, or oil is a byproduct of the crude.
Yes, yeah.
But they are priced differently.
Yeah. So we have.
You're talking about euro, or would you like to touch upon euro as the last 2 minutes, or
Euro? Yeah, we can touch up on the euro. Again, so all this is impulsive all the way down here. So this is corrective in here, where we would have a corrective type of wave count in here. This line here is all the way back from this major 3 here. So we're in the midst of a major 5th wave down as well. So a little bit like gold, where something big will have to happen. At the end of the day, it looks like a crack and a snap might happen on this line. We come down, so these numbers are a lot different as they are a corrective wave count. So I'll just stick with an A, B, C here so we can all understand. But at the moment, it's likely that that's, sorry, 1, 2, 3. This will be an A here. So that'll be A. This will be B. And you'll have a 1, 2. So first wave up, 1, 2, 3, 4, and a 5 up here. So it's very confusing, this one, because I don't really have enough time to teach what a corrective wave and the many different forms they come in, but at the base, we just try to keep things simple, and they're usually the most reliable outcome anyway. So it's just an A, a B, and 5 waves up for our C here, which looks likely to be complete. We can say that we can use Ben's Fibonacci. We're in between a bit of a hot zone, and here we've reached 50%, and we're very close to the 61.8. Not only that, we're in this hot zone, but we've on this very important trend line, and we've got these indecision type of candles in here, meaning that it's a bit of a time to be very cautious here, going either way really, but with our knowledge and understanding of an corrective wave count, it's likely this corrective wave has finished for now. Oops. And again, yes, different wave count numbers here, but it's likely this is our first impulsive wave down to a bigger degree, a wave 2, with our first minor wave down for a 1, 2, 3, 4, and a 5. And I haven't caught up yet down here.
Fantastic. Thank you.
So here, oops. 1, 2, 3, 4, and your 5 waves down there. So this will be an A, a B, and a C. Or you might come up here. Oop. All right, that looks pretty good. Could come all the way up there for a reversal down. Anyway, that's it from me. If anyone's got any questions or they want to ask anything, feel free. No, pretty quiet. Okay.
Don,
So
yeah, is it Don? You can speak, Dan.
it's Prabjot. I'm actually quite surprised that you're saying that the gold can hit back to 2019. So that's almost 2100. So that's quite high for gold. Just an observation.
It's at an all-time high now.
Yeah. Thanks for that, Marty.
That's okay.
And Dan was asking about any fundamentals. His question is, do you consider any fundamentals with interest rates in that is US dollar index?
With the dollar, I don't have a very strong view on interest rates towards the dollar. I more look at probably big news events, like your economic outlooks, your policy changes, and when Mr. Jerome Powell speaks, I would look at the headlines. I wouldn't read right into what he says, but I just look at the headlines to see if there's going to be a big change in the way dollars are spent, rather than interest rates and inflation. That's more for indices. I put more weight on indices with those. Does that answer the question? Everyone remembers these channels?
Yep.
Might have another double top here. Might be something you can look into. Little bonus. Oops. But anyway, I think that's all from me for today, Partha.
Thank you very much. That was fantastic. That was brilliant on the gold. That was an eye opener. Yeah, that is fantastic. And thank you all for your time on this Sunday evening. And thanks for your participation. It is fantastic interactive meeting. And Ben says excellent. Marty and Partha, thank you all, because you were all excellent. That's why we could contribute. Thanks to each one of you who has contributed. Thank you.
Okay. Bye for now.
and bye for
Thank you,
now.
guys. Have a nice day.
Bye.
Thank you all. Bye.
Thanks, guys. Bye.
Yeah.
Thank you. Bye-bye. Bye.
Bye bye.